appreciate the opportunity to speak to everybody today. And as you go through this, I think John Gugliada is going to put his contact information in the chat so you can contact him either today or at a later date. If you have any questions about what we do, how we do it, I'll briefly explain. Family Enterprise USA's mission and purpose is to promote and advocate for generationally owned family businesses and their lifetime of savings. We represent all family businesses, all sizes and all industries at a national level in Washington, D.C., and we work on those issues that you talked to us about through this survey that I'm going to share with you today. Two of our platinum sponsors that support this survey are the law firms actually that we work with, Squire Patton Boggs and the Brownstein Law Firm. So as I continue money where their mouth is, they not only work for us, but they actually write their own check to Family Enterprise USA. These are some of the organizations that Angie mentioned, some of the family business centers around the country that distributed their survey, got results from those surveys. So we really appreciate your support. And some of the trade associations like American Farm Bureau and the American Trucking Associations that also helped us. So let's get right into it. Family business is big business. You may not know this because we developed this data about 3 years ago now. 32 million family businesses in America. They generate 83 million jobs and 59% of the workforce. That's why they pay attention to you in Washington, D.C. Until then, we really didn't get much attention in Washington, D.C., and now we do by our members of Congress. Family businesses generate 54% of the GDP in this country, or $7.7 trillion. Again, that's why you're important. That's why your voice needs to be heard, and that's why you need to be talking to your members of Congress. So in this annual survey, which we've been doing since 2007, when Family Enterprise USA was formed, we got 571 respondents this year, twice what we got in the prior year. We covered about 42 states. So we're very enthusiastic about this. We will do it again next year. We hope you'll support us. This survey is very important for members of Congress to know what your concerns and your issues are. So let's start with who actually answered the survey. Those that own or manage the business, 84% of them are sole or majority owners, 61% sole owners. That's who we want to answer this survey because we want those decision makers to be giving us their input. 92% of them are CEOs or president or senior management, and 64% are that CEO and president. So once again, we want the people that are setting the strategic direction of the business at the C-suite level to respond to this survey. This is an important question for members of Congress because members of Congress continue to believe that we're a country only of family farms. And while, yes, of course, family farms in this country are critically important, and we're probably going to have a farm bill in this session before the end of the year, we've got to remember that there are other industries like manufacturing, which is 20% of the businesses in America, that have the same issues that farming families have, that illiquid nature of their business and their assets, and the difficulty in passing that business on to the next generation. So you can see agriculture is only 5% of the businesses, the family businesses in America. And yet construction is 14%, manufacturing is 26%, and real estate is 7%. So once again, we remind members of Congress to not only pay attention to the farming industry, but all these other industries. What generation are in the ownership and management of these businesses? Well, 68% are in generation 1 and 2. We think that's important, but we also think it's important that you see that 19% is in generation 3. Active in the management of the business, 60% are generation 1 and 2, but generation 3 is 23%. How many years has a family business been in operation? This is an important statistic for members of Congress because they need to understand that family businesses plan their business as a legacy, sustainability for their family members as well as their employees. So 74% of the family businesses have been in business over 30 years. And you can see that 37% of them have been in business 50 years or longer. So we all know this, but members of Congress don't know this. So that's why this is an important fact for us to convey to members of Congress. So let's talk about passing that business on to the next generation. 86% of family business owners say that it is very important for the sustainability of my business to pass it on to the next generation. 79% of them say it is a family legacy. So again, very important. 66% of them have actually passed ownership on to the next generation. We're very excited about that. It's up 29% from last year, as you can see in the blue circle. Only 51% last year passed ownership. We suspect this is the case because many of you know that the lifetime exemption for the gift estate and generation skipping tax is at an all-time high of $13 million. But that's going to expire at the end of 2025. Family businesses are listening to us and telling them, get this gifting done, get your estate plan done before this exemption goes away. It's my personal belief that that exemption will not stay at $13 million. It will probably go down. So if you haven't done your planning, do your planning. It's very important. This is about the passing of the ownership is that only 34% pass on full or controlling ownership. So family founders, entrepreneurs still struggle with passing the control on. We know it's difficult, but I can't encourage you founders enough to do this. It's critically important to your next generation, not only from an ownership standpoint, financial standpoint, but just psychologically, the next generation needs to have control. They don't have control and you give them the responsibility. It makes no sense and it's not good in the running of the business. So I know you struggle with my next generation isn't ready yet, or the market's not good, or my industry timing isn't good. Well, I would say you really need to plan it and make it happen. Because at the end of the day, that's really going to contribute to the sustainability of your business and truly make it the legacy that you all say you want to have. The strategy that family business owners use, 53% of them use gifts. That's pretty common, and 26% sale. Let's talk about the makeup of these family business owners, the revenues, their employees, and how they work with their community. So 34% of them employ 100 people or more, but you can see almost half, 49%, employ 1 to 50. So you have all sizes of businesses that respond to this survey, small, medium, and large. They tend to be on the medium or larger size in many cases because once a family business is multi-generational, they really understand the purpose and the need for advocacy, for meeting with members of Congress and talking to them. But again, you can see that 89% have 1 to 50 employees. This is the first time we asked this question, and I'm so pleased to have the answer. Because anecdotally, we all believe that family businesses treat their employees very well, and they have generations of employees working in the business. And in fact, we found out from the survey, 72% of them have generations of employees. So truly, family businesses plan their business as a legacy, not just for themselves, their family, but for their employees. That's so very important. So we're sharing this a lot with members of Congress. So during 2022, remember we were still in the pandemic, but 61% of these employers added jobs, and only 9% lost jobs. And in fact, 91% their employees employed. So of those that added jobs, 88% of those were in the 1 to 50 range in terms of the numbers of jobs they added. But 94% added 1 to 500 jobs. And you can see the breakdown in those on this slide. And we're happy to share the slides with everyone after the fact, Angie, if you'd like to do that, so that because I know some of this is a little bit too much data to follow. So of those that lost jobs, that 9% that lost jobs, 90% of them lost 1 to 50 jobs. So again, on the lower end of the spectrum in terms of the number of jobs lost. Salaries and benefits. Again, an important statistic for members of Congress. We all believed that family businesses pay better in terms of salaries, wages, and benefits. But now we know the true fact. They absolutely do. 46% of family businesses pay above average in terms of salaries and benefits. And this is what we've learned. This is I believe the second, maybe the third year we've asked this question, and it's always around this percent. So once again, we're very encouraged. We know that family businesses treat their employees better than non-family businesses. In terms of gross revenues, well, you can see that 39% of them have 20 million or more in gross revenues. In fact, 16% have 21 to 50 million in revenues, and 23% have over 50 million in revenues. So once again, they tend to be on kind of the medium to larger size. So we asked them in 2022, and I should have mentioned that this survey was in the field January 5th of 2023 through the end of February or mid-February of 2023. So half the time that we were in the field the prior year. We asked them, did your business grow or decline in 2022? And 71% of them said it grew. Only 16% said that they declined. What percent did it grow by? And 50% of them grew 11 or more percent. So of those that grew, 50% of those grew 11% or more. And you can see that, in fact, 31% of them grew 11 to 20%. So we're very encouraged about that. Even through the pandemic, family businesses are growing. They figured it out. We know that family businesses understand how to be flexible. They understand how to sustain their business through all difficult times. They're not managing their business quarter to quarter. They get to manage for the long term, and they prepare for that. So generally, we believe that family businesses really performed well in the pandemic because of that. And that's why the statistic you saw earlier, 91% of family businesses kept their employees employed throughout the pandemic, even some of those that had to shut their doors. So of those that declined, 57% of those that did decline, they declined by 10% or less. So again, on the smaller scale, in terms of the revenue decline, and you can see that 30% of them actually declined 5% or less. So why did their revenue grow or decline? Well, the first reason, as you can see, is 35% grew or declined based on their strategic business choices. And then these economic, 26% are these economic conditions. And lastly, 22% is the industry conditions. This has been relatively consistent over time. It did switch a little bit in the first year of the pandemic. Economic conditions, in fact, was first. And then strategic choices were actually third. But these 1, 2, and 3 strategic choices, economic conditions, industry conditions have been in the top 3 interchangeable kind of year after year. Do they expect their business to grow or decline going forward? Well, in 2023. So remember, we asked this early in 2023. 65% of them said, I expect my business to grow in 2020. So optimistic, encouraging, and only 18% expected their business to decline. What do they think is their greatest impediment to growth? Well, you all live this every day, so it's probably not a surprise that the cost and availability of labor is the #1 impediment to growth. And we see that, right? We see that in the difficulty in trying to recruit new talent, keep new talent, pay for new talent, and pay for existing talent. Some of our family businesses have told us that they have had to increase the existing compensation of their employees to match that compensation they have to pay to bring in new employees. So it's been a real struggle. I think it's eased off a little bit is what we're hearing, but still maintaining the availability of labor and what you have to do to keep that labor force is always a difficult situation, but very high in terms of the next impediment is the market conditions. And then you see inflation, number 3. Well, inflation wasn't even on the screen before. So that has been a huge issue. We have a slide around how it impacted family businesses. But those are the things that family businesses are wrestling with. And last is the government regulations. While it's not a huge percent, it's a big enough percent, and it's an important one that we find family businesses talking about all the time. Again, another important statistic I hope that you will remember members of Congress about, because they do not know this. The reason that family businesses are important to their communities is because they give 82% of their giving to a local charity or a local chapter of a national charity. So not only do they support their family members and their employees, they support their communities. And what happens when that family business has to be sold for whatever reason, maybe a family member dies and the estate tax has to be paid, the family loses their livelihood, the employees lose their jobs, and the community loses all giving. 82%. So it's really, really important to connect the dots for your member of Congress to understand what an impact that family business has on the community. So let's talk about the critical tax and economic issues that are facing family businesses. Well, here are their top tax policy issues, and income tax is by far the number one issue. And you can see it's higher this year than it was last year. 50%. In 2022, it was 45%. And we believe that's the case because we've learned that most family businesses, and I have a slide around this, pay ordinary income tax. So they're paying 37% plus state tax just to manage their business every day. In the last tax bill, TGA, the Trump tax bill that was passed, America got a 21% tax rate. Well, we know that only 20% of family businesses operate as a corporation or a regular corporation, a C Corp. They operate as an LLC or an LP or a S Corp. And so their income passes through directly to their individual income tax, and they're paying those high rates of tax that I talked about. So that's why income tax is at the top of their list. We continue to remind members of Congress of that fact. Second is the estate tax, because we all know that family businesses, individuals pay an estate tax, corporations don't pay an estate tax. It is truly an individual tax. So that's second on the list, and then you can see payroll and then capital gains tax. In terms of the estate tax provision, what is most important to family businesses is the current exemption, making that current exemption I talked about earlier at 13 million permanent. Well, that I don't believe is going to happen. It's possible at the end of 2025. It would be wonderful if it was permanent. Then we could all have certainty and permanency in our tax law, which is a rare phenomenon. But that's what family businesses would like, because they need certainty and permanency in order to manage their businesses. 32% would like to have the tax repealed. We understand that. We believe in that. We believe that the estate tax, really, we know from the statistics, it just doesn't generate 1% of revenues in this country. It really is in place because of politics, quite frankly. And I don't think, though, in light of our political and economic world we live today, there is an opportunity for repeal. Someday, maybe, but this is where we are today. And then lastly, 16% would like to see the rate reduced to 20%. Now, that is actually something that's doable. Through Policy and Taxation Group, Family Enterprise USA's sister organization, we have helped members of Congress to introduce legislation that would do just that, reduce the tax from 40% to 20%. It hasn't gotten the kind of traction we'd like to see it get, but it is bipartisan legislation, which I think is absolutely critical, and hope that it will resonate in this session of Congress, if not the next session of Congress. We believe that's a doable option and also reasonable, because why should you pay a higher rate of tax whether you die or you sell your business? At 20%, you're paying the same rate, again, whether you sell your business or you die. In terms of the top economic policy, well, once again, income tax is at the top of the list, as you can see, at 19%. Estate tax is second. But third is simplifying the tax code. That's very interesting because it's never been that high before. And we believe it's that high because you all know you deal with changes in our tax code day after day. It's complicated to understand, it's complicated to comply with, and it's frustrating. Now it's finally to the point where family businesses believe it is a higher priority than maybe it's been in the past. And then reducing the federal deficit is close. And the reason I think that's important is, as family business owners, you know what debt does to your business. And so you know what it does to this country, and you're concerned about that. And I think members of Congress are concerned about it as well. So it's good that they hear your voice. It's good that they understand you agree and you believe that the federal deficit is a concern. So I mentioned this earlier, family businesses hold their business as a pass-through entity. And you can see on the screen, 80% of them hold their business as a pass-through entity. In fact, 56 are an S corp. That's why income tax is so important, because you're all paying these very high income tax rates. No one knew the statistic until we asked this question last year and again this year. The percent went up this year. So this isn't, again, one of those statistics we tell members of Congress over and over again. And you should know, as Angie mentioned, we are an advocacy organization. We are your voice at a national level in Washington, D.C. We don't just talk about this. We don't just present slides. We actually meet with members of Congress on a daily basis. We do it Zoom, we do it in person, we do it any way we can. And in the last Build Back Better Act, and we can talk at length about that if anyone's interested, there were 10 provisions in that Build Back Better Act that would have devastated family businesses. We did hundreds of meetings with members of Congress so they would understand how hurtful those provisions were. We managed to have 6 pulled out of the House bill before it went to the Senate, and the other 4 pulled out of the Senate bill before it was actually voted on. But it was a heavy lift. And many of the issues that we worked on, trade associations don't work on. They work on the business issues. We work on those issues that affect you as owners of a family business, like elimination of grantor trusts that they were trying to do, like imposing a tax, a surtax, income tax on already the 37% you're paying if you hold a family business in a trust and you make more than $200,000 a year, which is a small business. So those issues, or not holding your private stock of your business in an IRA. If you did that, it was going to have to be distributed out, paid taxes on. It would have been very difficult to continue to operate. So that's what we do every day, all day long. We did ask the question about minority-owned businesses. This is similar to last year. I'm kind of disappointed that we don't have more minority-owned family businesses, but I'm encouraged that that's go up. You can see 22% are women-owned and 2% Asian American and 1% Hispanic and 1% African-owned, African-American. Inflation. You saw that inflation was an important factor for family businesses. And in fact, 74% of you had your profitability reduced because of inflation. And that continues to be a concern, even though I think it's gone down somewhat. We all know, we read the papers every day, inflation is still with us. Environmental concerns. 58% of you have been impacted by environmental concerns. And that's a pretty big percent. Again, we didn't know this percent. We were asked to ask this question, and now we know the answer. Supply chain issues, even a much larger percent than I would have suspected. 86% of you were affected by supply chain issues. Most family businesses operate multi-state. 32% operate in 2 to 5 states, but 25% of you operate in 21 states or more. So that's an issue. We work at a national level, so we represent all states. So now I'm going to talk to you about the Congressional Family Business Caucus. If there are some questions you want to ask me about what I just presented before I talk about this, I'm happy to do that.
I just have one. I had Angie, it's Matt. I had one question on your survey when you said about family businesses paying better than non-family businesses. Was that, I don't remember from the survey, was that based on hard data, or is that based on people giving their opinion as to where they think they fit?
Yeah, it's the survey question is, do you pay better in terms of your salaries and benefits than your non-family business competitor? So it is from the family business themselves. And I believe most family business owners know who their competitors are. And because they have to compete with those wages and benefits, they know whether they're in line with their competitors or not. So that's how we ask the question.
Okay. Hey, Pat, there was a question. Do you see certain areas or certain regions of the country doing better or worse?
That's a great question. We don't survey around that information. We do have the location of where, obviously, because we know how many states contributed, where the information comes from, but we don't know that those economics from a geographic standpoint.
Okay, that's all the questions that I had.
Okay. All right, I'm going to move on to the caucus. We think it's a very, very important thing for family businesses to have a voice. I've learned that, as I continue to say, family business owners are not understood by members of Congress. When I meet with them and I say I'm here representing family businesses in the United States, they say, oh, you mean small business? And I say, no, we are small business, but we're also medium and large businesses. We're family-owned businesses. That's who we're here to talk to you about. They really don't understand what you do, how you do it, what your concerns are. It was just astounding to me how little they knew. So we had this, idea to help Congress form a Congressional Family Business Caucus. Actually, we found that none had existed. So we did our homework. We figured out that there are 100 members of Congress, both House and Senate, that come from, work with, or still have family businesses. So we have targeted those members of Congress, and I'm happy to say that this Congressional Caucus is officially formed. 2 events this year. Our 3rd event is September 20th in Washington, D.C. What's really important about this caucus, it is an education caucus. It's not a policy caucus. It's not meant to set policy. It's meant to educate members of Congress. And it's meant to support those members of Congress that actually understand and support family business owners. And then we connect the family business owners in their districts with the family, the members of Congress and the family business owners in their districts. The other thing that's very important about this caucus is it is bipartisan. We thought that is incredibly important. Family Enterprise USA is a bipartisan organization, as is Policy and Taxation Group. We always have, we always will be. That's how you get things done in Washington, D.C. And I think it's important as a country. We will, various activities, as I talked about. We have our House caucus formed. We're working on our Senate. I'll share that with you in a minute. We will do these fly-ins, as we call them, these caucus meetings. We have a half a dozen to a dozen family business owners come and talk about their business. Sometimes the family leaders, as Angie did at our last caucus meeting, got to speak to the group, speak to the caucus and everyone in attendance, and explain family businesses and who they are and what they do. Family Enterprise USA can, by law, since we're a 501c3, we can fund these efforts. It is a congressional caucus, so they have to run it. It has to be their caucus. Communication comes from them, but we can be in the background doing all the work, funding it, and doing the, quite frankly, the heavy lifting. These are our caucus chairs. We're very excited, again, bipartisan. We have Jody Arrington of Texas, and we have Henry Cuellar of Texas. Henry Cuellar is a Democrat. Jody Arrington is a Republican. Brad Schneider of Illinois, who has been amazing, very, very helpful, as Claudia Tenney, who's a Republican in New York. They've been at all of our, and we really, really appreciate the support of all of our House co-chairs. Susan Collins has agreed to be the Republican in the Senate, and we are talking to other senators, particularly Jackie Rosen in Nevada, to be our Democrat co-chair in the Senate. We're encouraged and hopeful that she will say yes. We don't believe this is that heavy of a lift for the members of Congress, but in today's world, I'd say that it's more difficult for members of Congress to commit to do something. It's easier if they don't commit to do something, because then they don't get criticized. It seems like whether they do something good or bad, they always run the risk they're going to get criticized, and they seem to shy away from that. It's disappointing to me. I've been working in Washington, D.C. almost 30 years now, and it's not like it used to be. It's unfortunate, but I think with where we are today with our media and our communications in this country, it's really hard to get members of Congress to take a stand. So we're encouraged, but it's been a much heavier lift than we would have imagined. This is not exactly current because we just added some more members tomorrow. We have almost 30 members of the House, both Republicans and Democrats, that are now members of the caucus. We have spoken to 100, and we have a much longer list of those that said they're interested. But we've learned that it takes 3, 4, 5, 6 meetings sometimes to get the member of Congress and their staff member to actually do the work and sign on to the caucus. It's a simple process. All they need to do is contact one of the co-chairs, staff, whoever, and by phone, by email, whatever, by text, and say, I want to be part of the Congressional Family Business Caucus.
Hey, Pat, I just had a question come to me asking if you can briefly explain what a caucus does and how it operates.
Yeah, that's a great question. So there's about 300 caucuses in Congress. And some caucuses are very, very active, like the Black Caucus. But others, the Congressional Black Caucus, others, let's say like the Bike Caucus, or there's caucuses that they just have a caucus. They don't really do much about it. We think it's important that a caucus be active. Primarily, the reason for the caucus, again, is for members of Congress to work on an issue, work on a constituency that they think is important. In this case, we think it's family businesses, and educating other members of Congress and the voters, quite frankly, who don't understand what family businesses are either. So in our case, that's what we believe this caucus is going to do, which I already talked about. But there are caucuses that actually have membership that's paid membership. Most of you are probably familiar with the Problem Solvers Caucus. It's an amazing caucus. It was formed over 20 years ago with the help of No Labels, which is a bipartisan organization. Now, the Problem Solvers Caucus, as its name suggests, its role is really to solve problems in Congress. It's a half Democrats and half Republicans. It's part House, part Senate. They do that by design. So they meet to try to get legislation passed that's bipartisan legislation. That is a membership base. So the members of Congress that are part of that caucus actually contribute to be part of that caucus. That's not our caucus yet. Someday it may be at that point. So they're different. They're run differently. They're organized differently. But one thing is the same, is that they are the Congressional Family Business Caucus. So there are a lot of rules, as is typical in Congress, that you have to follow, and admin committee what you can and can't do. So I hope that answers your question. So I had mentioned our next event, is in DC. If you have an interest in coming and telling your story, your family business story, please let myself or John Gugliada know. We appreciate that. And this is how the member of Congress would actually become a member of the caucus. I know this is very hard to see. The only reason I'm showing it to you is this is what's called a Dear Colleague. This letter was sent out from all the 4 co-chairs. At the top in the black box is the staff of Arrington's, Mimi. So many people contact her and say, my boss has agreed to be a member of the caucus, but you should also contact the others that are at the bottom of the letter and tell them the same thing. So it's that informal. So you get your name gets added to the list. So this letter, this Dear Colleague from all 4 of these co-chairs have been sent out to all members of Congress. And again, if a member wants to join the caucus, that's all they have to do, is respond to this. Now, I would mention that on our website, FamilyEnterpriseUSA.com, you will see a call to action. It pops up as soon as you go on our website. The call to action is tell your member of Congress to join the Congressional Family Business Caucus. Even if you don't know who your member of Congress is, it can tell you that. Put in your zip code. It's already a pre-filled in form for you. You basically just sign it, add a message of your own if you want to do that, and it goes directly to your member of Congress. So far, we've had 163 people do that. So we think it's really important. It's just another way to get your voice heard with members of Congress. So that really concludes my remarks. I'm happy to take any questions, any input you have for us, anything you're wrestling with in terms of concerns or issues that are tax or legislative or economic in nature. I'm happy to talk about it. I'm happy to hear about it from you.
Pat, when will you do the survey again?
January of next year, 2024. So we usually go in the field the very first week in January, right after the holidays, and we'll be in the field a month to 6 weeks.
Okay, and I can send. I know John put a link in the chat. Is that the link to where they could get the letter, where they could email their representative? If
Right,
not,
but it's probably the link. They'll go to the CTA, the call to action.
Yeah, it'll just pop up, Angie.
Okay.
Yeah, that's typically what happens. I would remind everybody that we are a 501c3 organization, so this is not-for-profit charitable organization. We're an advocacy organization. So that's how we're unique from your trade associations, in that we advocate for you, the family members of the business. Not that we don't overlap with these trade associations, because we're on a coalition with them and we work with them, but our issues aren't always the same issues. And we're not unique, again, to any industry or size of business. If you have a family foundation as well, family foundations can support what we're doing.
Okay. Do you have any interest from any of the representation in our area?
Interests in terms of the
Congress, in terms of the caucus. Yeah.
I don't have the list in front of me right now with you, so I can't really tell you. But I think that, it never hurts to have, even if you have a member that's already part of the caucus, you should go on and thank them for being part of the caucus. And you should also, encourage them to continue and be active in the caucus. Now, sometimes we have members that are in the caucus, they're not active.
Okay. All right. Did anyone else have any questions? No. All right. Well, thank you so much, Pat and John, for joining us, and thank you for your sponsorship of the center. As I mentioned, we recorded this presentation. We will edit it and send it out to share, you feel free to pass it on to any colleague, any of your employees. There's a lot of great information in here, and I will be reaching out in January. Hopefully all of you, and again, many of the people on did participate in the survey, which we appreciate. Hopefully you'll be willing to do that again.
All right. Thank you, Angie. We appreciate the
Okay.
opportunity and your support as well. Thanks
Okay,
so
thank
much.
you.